Hello, folks. Brandon Chapman with you. It's a Wednesday night video. So I'm normally on Monday, but with the holiday, we reshuffled things this week. So good to be with you. I'm glad to have an opportunity to share some of my insights on the market today. As you look, stocks were up, they were down. But the reality is, and this is the title of today's video, is bond yield liftoff should be a warning for stock investors, but bullish for gold. So we're going to kind of talk about that, look at some activity in CCJ and specifically, and again, some of the movement in the gold space. So as we look at the S&P, again, as we look at it throughout the course of the trading day, it looked like we were kind of getting some liftoff in the stocks after a period of selling, and you'll notice we're just wilting as we move into the close, which is happening in about 10 minutes. So again, does not look like we're going to finish strong. What is the overarching theme for stocks that are so troublesome? Again, as we look at 10-year Treasury yields, TNX, this is the fly in the ointment. So we're seeing the stock market weaken today, not on higher yields, but on lower yields. The realities of what's recently happened in terms of the sell-off in 2022 cannot be understated. And it's not just a matter of the fact that yields have gone higher. We've seen that before, but it's the pace with which they've gone higher, the speed with which they're selling off that has historically produced subpar returns. And so as we think going forward here in the coming year, 2022, you look at how we've kind of kicked things off here with the S&P so far this year down how much? Off of the close, down to the low so far today, we're talking about nearly 5%. It's going to be very hard, even if we pass through the January expiration for options this Friday, it's going to be really hard to make this back. January typically is a barometer for the rest of the year in terms of how January goes, so goes the rest of the year. Not looking so hot right now, especially, for example, you look at IWM. Small cap stocks are down even more significantly. If you look at off the close from essentially the close from 2021, we're down about 8%. So again, this is a rather significant move so far early this year. And the January effect is small cap stocks should outperform. And as we look at the dollar, UUP as a proxy using this ETF, the dollar has been modestly weak, right? And recently stronger. Again, the fact of the matter is small caps, which is more of a reflection of banking. So if we look at today's sector performance, what you'll see is that ultimately, what is the worst performing sector today? Was financials earlier. We're coming off, but second, pretty much tied with cyclicals. Financials really dragging the bottom here at down 1.5%. JP Morgan's earnings obviously was an issue on Monday. Big decline there. Again, the prospect, right, for these companies in a rising yield market. So, for example, the Fed is going to have their statement, their policy statement on the 25th and 26th of January. Everything is setting up right now for a potential rate increase. And again, when you think about the sell-off right now in bonds, we've talked about this before, but the reality is the 10-year has been selling off faster than the 30-year, meaning the rise in the 10-year yield has actually diminished, is actually smaller than what we've seen in terms of the 30-year. So look at TYX minus TNX. And what you're seeing is that generally speaking, right, look at the yields, the difference. 4 points, we're now down about 3 points right now, the difference between TNX and TYX, or TYX and TNX. So the reality is the 10 and 30 have come closer together. What about the 5-year and the 30-year? So again, how pervasive is the flattening of the curve? Look at the 5-year and 30-year. Again, we've gone from being about 6.5 points to about 5.2 points, meaning what? The difference between the 5-year Treasury yield and the 30-year has gotten tighter, closer together. The flattening of the curve is not representative of inflation, but obviously the Fed has to make some action in regards to inflation, obviously tapering, raising rates, maybe even allowing their balance sheet to come in as well. This announcement next week may set the stage for a March rate increase and maybe beyond. Some are looking at maybe 50 basis points. We go to the product depth here. This is the 30-day Fed funds rate. This is where it was on January 3rd, the first day of 2022. Look at where we stand today. Look at the steepness of this line, how deep we're getting here. This represents, so for example, 99 would represent a Fed funds rate kind of in that 1 to 1.25 range, or pricing in a decent probability of being 1 to 1.25 in this range down here. Again, By when? By March of 23. But look at where we're at maybe by June. Again, we're starting to price in maybe 3 rate increases by June. Again, this is, more than 3 rate increases by June. This is a rather significant development. Okay, so again, Jamie Dimon pointing out the fact that they may be raising more aggressively. You're definitely seeing this get priced into the futures by how deep this line is going, how far this is getting below 100. And again, we'll see how far the Fed can actually get before the market starts to feel stressed. So the recent selling in bonds has been problematic for gold, right? As bond yields have risen, the trade-off between gold that's a negative yielding asset versus bonds that are positive. The realities, though, Treasury bonds, given current inflation rates, are actually negative yielding when you're only getting 1.8% on a 10-year Treasury note. And so again, but the rise in yield has held gold at bay. But today's buying in Treasuries has kind of freed up gold to continue its seasonal path, one I've talked about for over a month, back here in November, looking for a rise, bottoming in December, rise into January, maybe early February. Maybe have a shot at getting to 175, maybe even 178, 79 on GLD. In one of my sessions last week, we talked about some significant option activity in GDX finally being realized today with a very significant move of 7.25%. So again, this is a significant breakout, right? Maybe yields start to come back. They've already done their damage, right? It's already reflective of the fact that the Fed is going to raise rates potentially more aggressively. And again, they've done the damage in gold. They're pricing in those rate increases, and done the damage in stocks. And again, it's going to continue throughout the course of the Fed tightening cycle, which they'll probably likely announce or talk about or start to lay out next week. They've already been laying the groundwork. They're going to further likely lay that groundwork even more firmly as to where the policy is going to go. So the sell-off here has done its damage in stocks, and it's going to continue because it's reflective of tighter Fed monetary policy. So as yields start to come back in, very likely what may happen, right? Obviously, this opens it up before the Fed begins to make their policy changes. Specifically, this does open up for a nice rally in gold. Silver's done well today as well. Stocks like Hecla Mining have done well. Sibanye SBSW, this is a junior gold miner, one we're looking at Friday. In fact, for our TheoTrade members, it was last Friday last Friday where I laid out a scenario for gold stocks. We looked at a number of gold stocks that scored well from a value and return on capital perspective. We looked at the flag yesterday forming in Sibanye and obviously the breakout here. This is one of the stocks we're on that kind of that value and return on capital watch list that is supplied for our members. But anyway, finally, we're going to look at another stock here. We're looking at CCJ. Now, CCJ is back against the wall at support here. You can notice the support going back in time. There's been a lot of bullish trade in CCJ that's been over the last many months. And what you're seeing is today, a lot of that's getting rolled back to levels that are reinitiating that bullish outlook here. So for example, look at all the trade that occurred here at 10/12/33 today, right? There's the March 26s in here, 33,000 contracts. But you'll notice a lot of the longer dated, shorter dated stuff, March expiration, February, getting closed, being rolled out towards June. So if we look June here, you'll notice 26, 32 upside call spread, right? Looking at potential of CCJ going to 32, maybe again, looking at the underside of 26. As you look at March here, what you'll see is again, that kind of being put in place here at a $24 strike price. A lot of this stuff being consolidated and rolled. And as we come back, we look at the time of sales. Again, you'll see the 18 March 26 in here as well. And again, the 24s, if you keep scrolling down into this. So again, what we're seeing is significant bullish trade today in CCJ. Multiple things. Again, a lot of rolling back, getting closer, more in tune with the current stock price. So if we rally, there's going to be a chance to make money. So again, as CCJ is holding today, long-legged spinning top, mid-range of yesterday's longer bearish candle. Again, look for maybe a trade through today's high or close above today's high in the coming days. Look for a swing back to maybe 25, 26. Maybe we stretch to 28. This is not a terrible near-term bullish setup for CCJ. Look at one other one, VVOS. This stock got some good announcement today. Again, it's a low float stock, very significant volatility, but it looked like, for some of their treatment solutions regarding sleep apnea, that dentists are kind of picking it up. Again, we've seen some slack of late, but again, significant trade, and there's the bell, in the weekly options today. It's expiring on Friday on the 250 strike. So again, a lot of buying, a lot of activity in here, probably some selling, but early buying today in Vivos, but also it spilled over into Smile Direct Club, SDC. So as we look at SDC, not really moving here. Similar business. They got a network of dentists. They produce stuff that, 3D printing for fixing your teeth, that kind of stuff. But on SDC, again, it was a 28 Jan today. Again, 18,000 contracts at 250. So I guess we're going the dentist today with Vivos and SDC. But again, some interesting trades, some potential for a lot of movement and volatility. Anyway, folks, that's a wrap for today's video. We'll be back on tomorrow for another video. I'll be back on next week on Monday. You have a great one. Thank you.